to have this be deductible, you have to spend more than half of your workday, or half of a workday actually working. And
Got
so
it.
a workday is constituted as 8 hours.
Okay.
So as long as you are working for 4.5 of those 8 hours or more than 4,
Okay.
the whole day can be considered business related.
Okay. So let's say I go to Florida
Mhm.
for a business trip, and I work 5 hours because I'm speaking and doing some other things. But then, I take my beautiful bride out to dinner, and it's just her and I. Can we write that dinner off?
Yes.
It's interesting. This is BetterWealth with Caleb Guilliams. We're talking about maximizing travel on deductions as it relates to traveling for business. I'm here with Dan Kaminsky, the guy that's running BetterWealth Tax, and a lot of business owners are traveling, and so will be good to see how we can maximize it. Obviously, not get in trouble, but pay as little tax as possible.
Yeah. So the number one rule when traveling for business is that you should have potential to generate revenue. That's like the
Yep.
overarching rule to this is, especially like in our type of business, it could be easy to say, oh, I'm going on vacation, but I have the potential to talk to people, so therefore that's considered business. And the original intent needs to be like there's going to be some sort of revenue generating activity.
I get that.
Yeah, and again, this you're going to hear I'm like a broken record. Something has to be reasonable here, and like there's a reasonable reason that you're going to be doing this. And so there's a couple stipulations that the IRS talks about. Is number one, it must be ordinary, and what that means is like the amount of money, the frequency, and the purpose of that travel.
Okay.
So if you like don't travel at all, and suddenly you're doing like a $30,000
private
trip,
jet.
yeah, like that's not in the context of what you do. That's not ordinary. Now it might be for certain executives. They may do that on a frequent basis, and that would actually be considered ordinary. So it's like this is where the whole nature of your situation is unique comes into play as well. But again, that frequency too is: are you doing it once? Are you doing it every other week? Again, it could all be classified depending on your situation. The other piece is it necessary? And so that question goes to, is it actually going to help increase the profits or expand your business?
Yep.
So ordinary, necessary, actually the intent needs to be for business.
Yep. So you need to try to make a profit, or it needs to be beneficial to business.
Yep.
It needs to be ordinary. It can't just be like something's insane.
Yep.
And
And then the other aspect is that every expense needs to be documented.
Yep. And that this is where people get themselves in trouble.
Yeah, it really is, because when it comes down to travel, lodging, transportation, meals, all of those categories, they have to be documented well, because otherwise the IRS likes to turn it around and say, if you didn't document those things, it's actually personal travel with what is the language? Incidental business activities. That's a big difference, huge difference. And so the documentation aspect is very, very important. And there's a lot of tips on that, whether it's writing names in purpose of conversation for meals, like is it an actual client versus a prospective client? What was the purpose of the conversation?
Yep.
All of those kinds of things. And you have to, in order to have this be deductible, you have to spend more than half of your workday, or half of a workday actually working. And
Got
so
it.
a workday is constituted as 8 hours.
Okay.
So as long as you are working for 4.5 of those 8 hours or more than 4,
Okay.
the whole day can be considered business related.
Okay. So let's say I go to Florida for a business trip, and I work 5 hours because I'm speaking and doing some other things. But then, I take my beautiful bride out to dinner, and it's just her and I. Can we write that dinner off?
Yes.
It's interesting.
Yes. So again, more than 50% of the time, or 50% of a workday, you can consider it the rest of the day as a workday. Travel away is considered as overnight from your primary residence. And so what that again means is basically as long as you're traveling away from your primary residence and sleeping overnight, that is considered travel. So some things when it comes to the IRS talk about like within a 50-mile radius or something like that. And this is just, again, if you're staying across the street and it's overnight and there's business purposes, you can consider that a write-off.
Yep.
So then there's really two things that come into play with this, is whether you're traveling domestically or internationally.
Yep.
And so domestic travel, if more than 50% of your time is truly business, you can write off the full amount.
Okay. Wow.
But if it's less than 50, it's 0%.
Oh, wow.
So this is where the documentation comes into play.
Yeah.
Is even at 49%, if you're working 3.9 hours, whatever,
just put in that extra 10 minutes, it will pay off.
None of it is.
Yeah.
And then it goes back to this incidental business activity piece and personal travel. Internationally, it's directly proportionate to the amount of time that it was actually business. So if you go travel internationally and 40% of the time you're doing business, 40% of that travel is considered deductible. Okay.
So let me ask you this. When you go on business, can you write the whole thing off, or is it like a 50% write-off?
Domestic or international?
Just domestic.
Yeah, so domestic, again, if it's more than 50% of the time.
You can write 100% off of food and everything.
Correct.
Okay.
As long as it's documented.
And international, you only write off the percentage of what you're working.
Correct.
Okay, I love it. So document, be reasonable, and document. Documenting is the number one reason why people are not doing certain strategies, because it sounds good, it sounds cool when you're listening to this, but at the end of the day, like we fall into this trap. It's like, I'll get the receipt, but it's the actual system in place. So any tips and tricks for making sure that people can lean into that?
Well, I think in this day and age, it comes down to the digital aspect. If more of the stuff can be taken care of online, so like if I'm going to book a hotel, I'm going to book that online, so I get a receipt in the email. Whether I'm transport on Uber, I've got a receipt like that. So it's like, you can kind of cheat the system and not be super proactive by knowing that your receipts are digital,
searchable.
But the best option would be to, each time you do travel, so like for you travel a lot, going to events, speaking, things like that. We really should package those together and be like, okay, for this trip, these were the expenses. Here's the documentation. Here's photos of you being at the event, all that kind of stuff. Because again, if you go from full deductibility to nothing, that's a big deal depending on how much you travel and what kind of expenditures you're incurring. So again, it's just a matter of keep digital notes, because the worst thing is, like, even receipts are like the worst, and you're like crumple them all up and you throw them in a box. And like, we've been talking about this idea of tax prep versus tax planning, and tax planning is being proactive and buttoning this all up so that if something were to happen where you were audited, you can simply say, here you go, and have it all be above board.
I note this in every episode that we talk about. This is not tax advice, where we are not your CPAs if you're just meeting us for the first time on YouTube. So make sure to consult somebody. If you don't have somebody or you want to work with us, go to betterwealth.com/tax, and we'll tell you all about what we're up to in BetterWealth Tax. Essentially, we want people to live more intentionally, and we know that this is a way into helping you free up some ideas, strategies, and cash so that you can put money into things that you actually care about. Anything that you want to end on maximizing deductions when travel?
No, I think this is another amazing tool if you're a business owner, to be able to do some cool stuff outside of business and have that be a write-off. And again, it just comes back to, as long as you play within the rules of the game, you can have some amazing benefits. So I hope you can take advantage of this, and I look forward to you letting us know if you have taken advantage and how that may have reduced your tax liability.
Send us pictures of you traveling, and so then you can have a digital trail when you get audited, you can say, I'm actually business travel, and who knows, we might help one or two people, and we'd love to see that.
Yeah, totally.
Thank you so much for listening to the BetterWealth podcast. It would mean the world to me if you could hit subscribe, leave a review, and share this with the people that you know and love.